Hey, everybody. So tonight we are doing lot sizes, stop losses, and finding take profit areas on your chart. And we're going to go all through this. First of all, though, too, is we are going to actually go through lot size. Now, I know people with this whole like with the lot size, what should I, leverage and risk towards my account, too. Depending on it really depends on how much you want to risk against your account. And if you're willing to do a smaller risk and grow that thing slower and let it growth wise, that's a great thing to do, because that's the way I like to. I never did those big chunks of trying to like max my lot size out. Never did. You don't want to rush things. You really don't. When it comes to trading, it's all about your account, and nothing else. We are here to help you to see where you guys need to go, to make your account grow. It's how fast you want to grow it. To me, slow and steady wins the race. It always has. It definitely always does when you grow your account. So lot size is the biggest thing for what you are managing to do. And I'm going to show you, like, when we figure it out, I'm going to show you different ways and how I do some of my lot size too, because do I trade all the same lot size? Absolutely not. I have three of them, three different lot sizes I set up for myself, what I want to risk onto my account. So depending on how the market's moving, if I'm trading at night, I do different lot sizes. I do different things. So it just all depends on what do you want to do, how do you want to do this, incorporate this. So I'm going to share my screen. First of all, it doesn't matter whatever size your account is. This works for any account. So it does not matter, So I'm going to share my screen. So obviously I'm on gold, but I use this lot size calculator up here. And I think Mr. Jason has put it in the chat numerous times in the chat. This is the one I still use, and it works great for what I do, for what I'm doing. Because really, if you can do anything with this. There's also, every single pair, indices, commodities, crypto is on here. Here's Bitcoin, Bitcoin, US dollar. You can figure all that stuff, what you want to leverage to your account. There's all sorts of things on here. There's even Dogecoin on here if you want to do that. Another crypto one. So Euro USD is on here. There is, right here, the euro to the US dollar. These are all sorts of you can trade the German 40 if you want to on here. It's an indice. I remember I used to trade that when I first got in, a little bit. But like I just trade, strictly gold. So I go down and find XAU USD gold to the US dollar. So I hit that, and that's how, so it's set US currency. So here's the thing is, like, when you're figuring your lot size, and you got to put your opening price to your stop loss price. So if I go over here, I got to move some stuff around. 1 second. There we go. All right. So if I go over here, look at our numbers. We don't have as many numbers after the point in there, right? They're giving us a lot more. They're getting right down to it. So that you're in a different type of chart, which doesn't mean a thing, really, if you really want put down to it, because you can put anything in, any numbers you want in here on this account you want for your opening price and your stop loss. It does not matter at all. It works really well. So just to say, all right, so say we're going to go in for a buy here, okay? Say we hopped in the market just for fun, say it's like right here, okay? You're going in here, you're figuring all your stuff. So we need some numbers. This is the whole point. We need numbers. So this is our entry price. Good thing to have. Paper, pencil. I always have it at my desk. Always. I always have, when I'm trading, I like to write numbers down. So what first number here? Let's set our stop loss say we're just going to do a 50. I don't know why I did that. That's weird. And so there's our 50 pip stop loss. Okay. Say you want to run this up here a little bit, whatever. So basically the numbers we want, our entry price is 2015.94. So I'm writing down 2015.94. That's my entry. Okay. So stop loss is, so the next thing you want to write down is your stop loss, 2015.44. So a lot of this you should have already set and figured out of your actual before you enter into a trade. Obviously, this here I'm just showing you how to actually set this up so you can, so you know what you're risking on your account. You don't want to do this during a trade. Obviously, you really don't, because you don't have time to figure all this stuff out, if that makes sense. So basically, like for right here, so we're going to go back to the lot size calculator. So what we're going to do, we're going to type in our entry. Okay. So 2015.94. That's our entry. Our stop loss is going to be 2015 44. So that's our stop loss. So we got those in there. Okay. So now we have our opening, we have our stop loss. So that's a 50 pip stop loss. Okay. 50 ticks. So whatever your account balance is, I just threw 1,000 in there, whatever. This is just to show you guys, this is 1,000. This is risking 2% of your account. Okay. Here's another key factor right here. This calculate lot size to MT4/MT5. Now I'm going to show you, it pops up and says contract size, right? So here's another thing, is finding what your contract size is to your, is actually open up your MT4, MT5, whatever, which one you want to open up. Don't matter if it's on Android, doesn't matter if it's on your iPhone, whatever. Open it up, and so you're in your quotes. So you have all the different, whatever, like your gold, your Bitcoin, whatever, GBP, USD, whatever, your pairs in there. Click down, hold down, and release back, and it should say details. Should be another screen that pops up. It should, mine's an iPhone, so mine says trade, charts, details, etc. We want details. So you go in there and there's details. Contract size is 100 in there. And that's what we want. We want to make sure that it is 100 in here for our contract size, because all of them are different. You go to like Euro USD, I think that's 100,000 on the contract size. So the contract size does matter on the pair you're trading. And even with those currency pairs, some of them do range differently too. Not all of them are 1,000 or 100,000 on those. So it's 100 on gold. So that's what we want. It's pretty simple, right? So we're good so far, what we're doing. So now we hit calculate. We're risking 2% of account on $1,000. Okay. Okay, so here we go. So here's a lot size. So here's $1,000 risking 2%. Here's your lot size right here. It tells you 0.4. 0.4 is 40 cents a pip. Okay, very easy to figure out. So that was super easy. So you're risking on that 50 pip stop, you're risking $20 if you get stopped out, you're risking 20 bucks. That's it. Pretty simple. You know what you're risking for amount of money. That's what we want to see, is like, okay, what do we want to risk? So like, say like me, if I risk 2%, that's what might be one. So if I go, say, if I want to risk, you could type in 1.5% risk, hit calculate again. So there you go. Your lot size would be 0.3. You're going to risk $15 if you get stopped out. So that makes it pretty simple, So I do actually do 3 different ones. 1% risking account obviously is a 0.2 lot size at a $10 risk. That makes sense on $1,000 account. So it does matter. So every time you like you win, you got to go in and kind of like, okay, I made like, I don't know, like $250 on that. So you got to add that in there. You can even put in if you want to put in the change to say it was something like that, or, just say it was this. Keep it simple. Everything, keep it simple is the key. So that you risk it there. So you can say, all right, so now my lot size changed when I'm at this. So you're at 0.25. So you're risking a pip. So the quarter pip on your lot size, so 0.25, and then money at risk is $12.50. So your stop lot, you get stopped out 50 pips. You know what you're doing, so you can even, you can play with this the whole structure of this whole platform is really neat how it works. So you're risking 2%, obviously you're doing 0.5, your lot size, type, you got to go and type it in so you know what you're risking on your MT4, MT5. And then money risking on that 2%, you're risking $25. So you get stopped out, that's $25 you lost. But who cares? Because you hit just say, there's $25, on a 0.5, you're gonna, on that there, it's $100 if you hit 200 pips. So it's pretty simple, pretty simple math. It matters what you want to risk. It's not like you're over trading, not like you're gonna like, if you want to like, you don't want to like say, hey, I'm gonna risk like 6% of my account, that you're up to $1.5 a pip, risk to your account. So this is off of like, this, that's pretty high on a $1,200 account, to be honest with you. To my opinion, I wouldn't push stuff that far with it. If you're risking something like this here, to me, that's just comfortable. I'm happy with this. I like to grow my account. I want to grow it and make it like, I want to see it grow. I don't want to see it like all of a sudden you take hits, you get frustrated, because that's what happens. Like, what your 3750, you're risking on this 3%, but you know what? Here's my mindset change of this whole thing. I don't look at the dollar amount. I look at the amount of pips. So I just lose 50 pips. But if I hit that like 200 pip, I made 200 pips. So that's what you know what I'm saying? So take the money, the money and the mindset out, use pips instead of dollar signs. Do not ever use, to me, don't ever use those a certain dollar. But yes, you do, you're going to know what when you do hit that, but say, hey, yeah, I just lost 50 pips. Cool. I never post my dollars, what it is. So it's always by pips. That's how I do it. It's by pips. I always do like, I hit some, when you hit some good trades in there, it's great. You hit 300-400 pips. Yeah. Yep. That's what I did, but this is the simplest way and the easiest way really of how to figure your lot size out of what you need to risk on your account. So you can push anything in this dollar amount you want, so you're, whatever you want to push in, say, hey, I'm starting out with $500, and I want to do like 2% risk on my account. There it is right here. Pretty simple, pretty easy. 2%, 0.2. There you go. You're risking $10 on a $500. So it's going to change what you're going to do, but the dollar amount does matter in there. So that's why when you grow your account, you got to go in there and readjust that stuff. You got to keep figuring that, all the time. You need to keep this where you can have it on your computer and you sit here and figure all this stuff out quick. And you want to do this stuff before you trade, obviously. You want to have this all written down on a piece of paper and you got it all sitting there so you know what lot size, what I'm risking, all this good stuff, what you need to do. So like this so like here you're good to go, 2% risk. If you want to, if you're willing to gamble at 0.4, it's pretty simple math, pretty easy, to do this. So this is the easiest way possible to figure this stuff out. Yeah, it's going to vary if you're actually going to, if you're going to do volatility stop, base stop losses, that stuff does, come in effect, but it just depends if you're, you're gonna have to go in here and readjust and say, hey, I could go if I want to say 100 pip stop loss, then you got to figure that 100 pip in there, and come back in here and figure it all out with what you're going to risk and all that. 75 pip stop loss, you have to come in here and figure all that stuff out. But you'll have to do all that stuff, figure all that stuff out. Me, I'm a 50 pip stop guy or less. 50 pips is the max I go. So it's totally up to you, what you guys want to do. I'm going to go into the chat here a second and see what's up. So is it bad? Looks like. Let's see. Damn. Let's see here. Is it a bad idea? Fairly new traders to use Damien Scalper. I was using the MT5 desktop and it works great, but wonder if it's a good idea to depend on it. Well, you know what? I guarantee you, I'll just tell you this right now. MT4, MT5's treated me really well. And I work with, and the MT4, MT5 is the most used ones to ever, to be used still today. I mean, it's done really well to me, so I wouldn't veer off and go somewhere else if it ain't, it's not broke. This is all new.
Hey, Clayton.
Yep.
What she's asking about is the Damon Scalper that allows you to actually set your take profit and stop loss right as you hit the entry. It's a tool that I use.
That's right. You do.
Yeah, I use that on MT5. And for me, no, I don't necessarily think it's a bad idea if you are trading by an arbitrary stop loss. So if you already know that you're going to trade 50 or 100 or 150 pip stop, that's perfect because it immediately sets your stop loss. It immediately sets your take profit. The disadvantage to it is it immediately sets your stop loss and it immediately sets your take profit. So if it's moving really quickly, you have no time to adjust, but it also keeps you within the range of where you're willing to risk. So it just kind of depends. Again, if you're going to use that Damon Scalper, definitely do it on a demo account first and get used to how it works.
Right. Sorry, I was thinking of there's something else in there that I was thinking of. I always get different people to ask me like different, instead of using MT4, MT5. So that's my fault there. I remember that. See, I don't use that, but I know Jason does, and you do good with it, So I don't use it, but I mean, it's whatever. Let's see, you've been putting a lot in here. What's John Baker, tonight's call cleans up to 1,300 pips. Yeah. Why not? Okay, here, Casey. Why not just use the calculator on impulse? Is there something not acceptable with that one? Well, with that one there, what was it? Let's go over here and let's just take a look at this tool over here. If I find it, right there it is. So this here, I am not, so with this here, you know, you're putting your amount size in, your percentage in, what you want to risk your account, change it. You can definitely use it if you want. It's totally up to you. I just like using this other one better. Let's see, where's it at? Am I not seeing it on here? Gold. So you can definitely most use this if you want, you know, it's going to give you about the same thing. But I think if you're using smaller account amounts, it won't figure it. So if you're using something, I think it is, what is it, Jason? You remember?
Yeah, so what it is on this calculator, whereas on this other one, when it asks you for the contract size,
Yeah,
if this calculator does not, therefore you can be up to a decimal point, like a 0.1 or a 0.01 off on what the lot size is, because it didn't ask you what that contract size was. Now on gold, it's always the same. It's really on the other pairs that you'll see that. So there's two reasons why I really like this other calculator that Clayton is showing you. Number one, contract size. Number two is you can also switch it from doing it by a stop loss price and do stop loss in pips. So if you are going to trade arbitrarily, all you got to know is how many pips you're willing to risk and what percentage, and it tells you what the lot size should be.
Yep. Yep. And it tells you down here at the bottom here too. So it's not gonna, it doesn't like what that was whole thing is that we notice is the contract size. Because like if you're trading like, you know, the crypto, you're trading like indices, all that contract size stuff is all different. It's 100% all different on that contract size. And that's a big thing to really watch out for. This thing really took off, didn't it? That was a nice 200 pepper. Let's see, let's keep moving on here. Jason, thanks Jason for helping out. Appreciate it, man. Good guy calculator, which shows the decimals to actually a pip on each pair. So is there a good guide calculator which shows which decimal is actually a pip on each pair? Well, there's not, to that one right there, really, there isn't really, you know, you really have to dig in and do a lot of research there. I wish there was a guy, because everything's different of what it actually really is, you know. So, you know, pretty much here, you know, on gold, we know the second number in is a pip, you know. So every pair is different and you have to go look them up, you know. I wish there was a chart on each one telling you where the pip was at on each one. That really confused me too at the beginning of trading. I just had to go find the research, and I researched it and what I came up with. So yeah, you just got to go find it.
So to add to that, there
Yeah.
is kind of a way to do it. It's not easy, but because of this calculator doing it in pips and doing it in by price, you can go look at whatever pair the price is and put it in there, and it will show you the lot size. So if you're looking at Euro USD, I had to go figure this out. I figured out that Euro USD, if I remember, is 0.1 is the lot size. It's like it's 0.0001. And so what I had to do if I wanted to have a 10 pip stop, I would go put the price in at what I thought was a 10 pip stop, or go put it in by stop loss in pips as 10 pips for a specific lot size. And it would tell me, a specific account balance with risk. So the easiest was if you were going to just do 100 pips or 10 pips, account balance of 1,000, risk of 1, it gives you a specific lot size. Okay, now what you can then do is go plug in the numbers where you're at and how many pips you think that is, how far down it is, and make it happen until your lot size matches between those two. And then you figure out where that decimal point is.
Yeah.
It's really a pain in the butt, but that's how I finally had to do it.
Yeah, it is. It is really a pain in the butt to figure that out, and you got to sit down and actually fit, for even each one about on the currency side, because they're all different too on that, where the pips are at to figure out on the pairs. So you actually got to go in and actually really figure that stuff all out and figure out where the pip is at and knowing what you're going to do. So that's why I like gold. It's pretty straightforward, pretty basic to do. Oh, let's see, where was I at right there? Let's say brand new chairs is possibly a great idea. Yeah. I will get into this here. Did you set your stop loss from entry or from spread? I will get into that here. Okay, using the calculator on the impulse gold is already figured in the 100. Okay, all right, so we're all caught up. We're pretty good in the chat here. So I mean, if anybody else has any more questions on this, how do with the whole lot size calculator, this is how I really do it. And like I said, I set all three, depending on the, you want to go in, even if you lose money too, you want to actually go back and refigure it and then, work your way back up there again, to it. Because if you're losing and you don't figure this out, it will go a lot quicker on you. You'll start losing that count. It'll start draining because what it's going to do, you're going to start over risking or over leveraging your account. So you got to bring your lot size down, what you're risking to it too, so you got to make sure you go in and refigure that stuff too. I think we're good to go. Is the grid on MT 450 or 100 pips per box? You know what? I really don't know. I really don't know that. That's the first question I've ever heard of that one anybody ever asking. I have no idea what it is on there. I don't even think I even use grids on mine. I do. I guess they are there, but I don't even pay attention what they are. Really. I don't. The grids don't matter to me. To really be honest with you, I don't. All right, so let's move on here a little bit. So everybody's got kind of this figured out. Everybody needs to go and actually do this if they have not figured it out, especially the new people really need to know how to do this. This is very important. So you're not like blowing the money out of your account or whatever, especially great time to do it. Doing demo, learning how to do this stuff right on demo. So all right, so let's go over here to impulse. So I guess like the biggest thing is really is to let's find out some actually, I guess we could figure out a stop loss next. So we want to go and kind of figure out what we want to do for, figure our stop loss here. And then we'll work into our TP systems here, figuring out the chart here a little bit too. So which I'm going to move back in the chart a little bit to show you guys how to figure out some of this stuff here. Taking trades, trying to figure out here. Let me go back here a little bit and see. Okay. Let me go back here a second. Yeah, all right. All right. Sounds good. All right. Figure this stuff out as we go. Okay. So basically, for a nice little what we're doing here on this trade here. So say we have, let's kind of draw a little bit on a chart here. Say we got a, set up for a nice like little reversal trade here. We were looking for something, come back down. If this does happen to you guys and you can't see your line come across, just click on this, bring this up, go to the three little dots, go to the first one here and go to bring to front, and I'll bring it right to the front. You won't have that problem anymore. So, which is nice. So saying we're looking for a nice little reversal and it meets all of our criteria, our steps and everything. We're all good here. We start, we had this nice pullback come across. We're looking for an entry, okay? And say, we got in here to stop this, whatever it happens, okay? So we're gonna say we got in. So our line cross came back down and we get into a trade saying when this thing crossed up, I'm a little click happy at times when this happens. So I, say we got into the market there, we had a blue line crossover, finding a stop loss. So people with setting a stop loss, I always go into here is my number one thing. I always go into this position here. So you got your accounts, your entry price. So whatever you hit that button at for a buy, you want to make sure you push this in. Say we actually got in, say a little lower, say we got 32. You want to make sure you're at 32. And I hit my mouse because say you got it at 32, and then I'll just come and I'll click on it, and then that automatically adjusts. If you've seen that, it'll automatically adjust my line here when I just click on it here. So when I come up to here, say, hey, I want, I always do 50 pips. Do 50 pips. You click on that, click on this side here, it'll automatically adjust. You're good to go. So there you go. That's how easy I do my stop losses. I don't get this overcomplicated or nothing. Here's another thing you could do too with this whole thing is you could do different. If you want to go say, hey, I'm just going to go to the, right straight down from like, it's kind of right there, the blue line, it's going to be a little bit of a tighter stop loss. You're at a 30 pip stop loss, that's volatility. You can, say, hey, I want to do like, what is it? The big one in between the clouds. You want to almost, like, we're up to here. Your stop loss is going to be opened up probably right around without measuring it properly. And I could do this. It's been a little bit, but I could do it. I can do it. I can make it happen. Remember how to do this here. I've done it like this. And come over here and done it like that, or put it in right here, or what is it? They go by candle, and then you can bring it back down to here. That's pretty big stop loss actually in there. So that's 86 pip stop loss. So that's, they teach it different ways how to do this. A lot of the times when it's a trade like this, I will even tighten this thing down and go to like the blue or the red, whatever I feel comfortable with, depending on how the market's moving. It's still under a 50 pip. So you can adjust it as you want. But yeah, you're trading your lot size as what it is though too is, okay, I'm having a tight stop loss or moving up to the blue line. It's even tighter. It's about a 32. Might have been a little high, but 33, pretty close in there. So that's going to be a tight stop loss. So you're really not risking that much on your account then. If you're only doing 32 pip stop loss, that isn't nothing. 33, that is not nothing, to it. Stop losses are very easy to do. Just don't try to overcomplicate things, when you do this whole thing. It's pretty much, it's easy because if you know what you're doing, you can come right in here. This is what's nice about this long position or short positions the same way too. And get to stay. As long as you got your entry price in first is number one key. Entry price. Then you go in and set stop loss. So mine's always 50. I would have done a 50 on here no matter what. Say, hey, I want to, for right now, since I'm in here, I'll just do 200, got it done. So it's set in there, So it's so the stop loss stuff is so easy. It's very easy to do. It's kind of almost somewhat a little bit hard to talk on because it's just, you gotta, like, when you figure it out, like with your lot size, you know what you're gonna have for stop loss. You know exactly what you're gonna have. You can go in there and figure out a bunch of different like types of stop losses to risk to your account and everything too. It's gonna change what your lot size is on there too. So it's pretty easy. I was just in the chat here. Okay, nothing really in the chat on the stop loss stuff. So does everybody kind of understand the stop loss, how it works? You got questions, go ahead and let's knock this thing out here because it's pretty easy. It's really not hard. I don't want to overcomplicate it. Really don't have my, let's see, where's my stuff? Oh, there it is. Well, we're all good. We're all good, I think. What do you think, Jason?
I would just add on the stop loss, since you asked, if you're doing an arbitrary stop loss, whether it's 50, 75, 100, whatever it is, always know that if it gets to your stop loss, whatever you, especially if you're doing an arbitrary, if your arbitrary stop loss is set to 50, and let's just assume that that's a $10 stop, anything past 50 is going to be more than 10 bucks. So don't ever move your stop loss down or up. That means you're now risking more of your count. But if you decide, oh, well, it's actually moving really good and I want to move my stop loss up to 30, okay, great. You just saved yourself $3 off of what you were risking. That's the way I look at it. Yep. And that way I always know I like Clayton trade a arbitrary stop loss on gold of 50 pips, which I know is, based on whatever your lot size is, could be, $1 a pip, a tenth of, a dime a pip, just depending on what your lot size is. Just always remember, and unless you're willing to risk more than what is there, don't move that stop loss. If you're willing to risk it and you're noticing that the markets are moving, okay, you can then pull your stop loss away some, but there again, know that you've just made your risk larger and your potential loss larger. That's the only thing I would caution people on.
No, oh, absolutely, absolutely. It is. I think I do know people that they overcomplicate it way too much and trying to like really get it down to a T, which it's just, to me it's like, really, what do you want to put at risk? What are you willing to put out there, for a lot size? I mean, do you want to take that, say 100 pips and say, hey, I'm going to open that up to 100 and a quarter? I mean, are you willing to risk that much more? I'm not. I can tell you that right now. It's going to stay there. If it hits it, it hits it. It's fine. It's whatever. Do not move that. If you have it at a, say we have it up here, for example, say we had it up here to our blue line and this thing started coming down and say, hey, okay, I can go up to a 50. Say I can slide this thing down to a 50. Don't go past it. Stay there. Do not go past it. If it goes through 50, then it's, let it go. It's fine. Get in, find the next trade to get into. Really, don't go any farther below. You know what you're willing and what your stop loss is, what you want to risk, what you're willing to put on the line. Don't get it overcomplicated. Don't worry about it. Take the L. Take that L with pride. I do. I don't care. It does not matter, because guess what? Next trade get into, again, look for the new trade to get into, because there's trades that always set up on here. Sometimes they're not overly fast. Sometimes they do take a little bit, but it ain't going to be too much longer. You're going to be into another trade again. I can guarantee you that. It doesn't take long. It really does not at all. So as long as you're willing to sit there and just, say, hey, I'm doing, in sticking with like a 34 pip stop loss, and you say, hey, if it hits that, I'm done. That one stops out. That trade's done. Cool. You kept it. You didn't risk that full 50 pips. You only did 34, so you lost less. Cool. That's awesome. That's a win. In part,
yeah. Well, and
you can take an L for a win. Trust me, you can.
Absolutely.
Very easily.
And that's the other thing I love about the calculator that it does is you leave your percentage alone. Don't move your percentage. If you change your stop loss from 50 to 100 and you've left your percentage the same, what it's going to do is it's going to take your lot size and cut it in half.
Yep.
And so what you're changing is the lot size. That way, you're still only risking the same amount of money. So if you're risking $50 at 50 pips, and you decide to cut the lot size in half, now you're risking $50 at 100 pips. It just has more room to move, but It also takes more pips to gain it up.
Yep.
But it also, again, it's just a little bit of math there.
Right. Here you go, Jace. Here's one for you in the chat. Is there a tool in NT4 or the fib? Thinking.
I'm not quite sure what they're asking. Is this tool on MT4, the fib, on an Android?
Well, I wonder. I guess I don't.
So I do know on an Android, you can throw a fib on an MT4 or MT5 platform, but I don't ever use the fib on my MT4. I always use it on impulse if I'm going to fib anything.
Right, because what really, just to keep it simple and easy, everybody, is just hit that buy and sell button on your your MT4, MT5. Just hit the buy and sell on it. That's really all you need to do. Set your lot size, stop loss, take profit. That's all you really need to do. Use your tools on your impulse. Use your tools on your whatever scanner that you're using, I should say. And like, this is the long position, short position. This is, everything's on here. You should be using this on here, so you're not actually using the using your NT4. Keep that clean. Mine has candles on it. That's it. On my MT5, I trade it. I use MT5. I get candlesticks. The red or the green on mine. That's all I ever use. That's it. I keep it simple. Hit the buy, sell, whatever. Put my perimeters in, stop loss, take profit, and that's it. That's all I do. That's all I want to do with it. That's my money maker. I don't want to mess with it. I want to keep all my drawings and stuff right here in front of me visually on a computer. That's where I want to keep it. So, all right. So let's go on to like find and take profit. Okay, where to set TPs? What is this? The biggest question what I get is, where do you see these TPs at? Where do you find them at? Because this is taking some stuff off. Like, to me, is I've learned a lot of this stuff off of other educators in our company. Okay, This is nothing new or anything like this, okay? It's knowing where structure is in the market and where it's going, because it always goes back and finds structure in the market again. It always does. It's the most common thing. It always repeats itself. So when it's going down, we're going back up with this. I know this isn't a very good spot right here to do this, but there is a, you can go find a TP. If you're shooting for 200 pips, you're shooting, say, like a, whatever, a one to, say you got, whatever, you're shooting for 200 pips, shoot for 200 pips, whatever you want to do. If you're shooting 150, shoot for 150 pips. I recommend people starting on demo, 150 to 200 pips. Get used to it. No problem. Get used to it. Absolutely. So you're saying, okay, bam, bam, I'm getting these nice 200, easy. I'm growing my account. I'm seeing my account grow in the right direction. That's what you want to do. But when you get going a little bit and say, hey, I want to start, like, I see other things in the market now. I see where structure's at. I see, all these things going back and hitting other structure in the market. So, and a lot of times you can see this on the one here. So you say, we got this in. A lot of times what I do, everybody, is, so I'm in here. Let's try that again. There we go. Get in here. I got my entry set. I come in here, boom, hit my 50 pips in here. Okay, I go in and I modify my order right away, and I put my stop loss in. So what I do when I'm not for sure where I want to take TP or structure into the market, you see this is a high point in the market of structure right here, right here, right here, right here. There's 3 different areas right here. Okay. So is this a possibility? Yeah, you could run this. You could set your TP, set it. I would set it. I don't use wicks. I go to bodies up here. So you could set your TP up here at 428 pips. Okay, yeah, it's a weird number. So what? That's a TP in the market for me. Did you hit it? Let's go find out. Boom. TP right there. Did it take a while? Yeah, it did. But in the mornings, does it take that much? No. Depending on the day of the market, when it moves. So here's another, that's a spot. You move that up to here, TP, right up to here. That's 500. That's another structure area right here. And what you can do, I find myself doing this. Boom. 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 So you can sit there and go lines like that on your chart, color code, whatever you want to do, and say, hey, I'm going to run it up to here. I'll run it up to that TP. I see it going there. Oh, I think I'm going to go up there. Boom. God, it did. Look at that. It hit right there. Hit on that one. Perfect. That's 568 pips. That is a 1 to 11.36. That's actually a really, really good one. It took a while to get there, but it's a possibility. It does go back. So it goes back and touch structure. It always will code down, come back. It will do it. And it does the same thing to go the other way. If it's going up, it'll do the same thing. You can go find structure going down in the market too. This thing only went up to here and it started to fall. But a lot of times when you see stuff like this happen, usually it's just retesting an area and going back down. Usually in the market is what we see on overall trend on this. So let's do something as we go down. So say, hey, we had our line drawn here. So I'm going to just kind of like walk people through this here a little bit. Say right around there. Okay. Say, hey, we got into a trade. We got into it right here. So we're going to go over here, get our short out. Okay. So let's say time we got in. can't totally see. If I move it over here a little bit, there we go. Yeah, it would have been very close, right? It would have been back up right in, say we got into this candle here. Say we got into there. You go in there and here's the same thing. I would do this over and over repeatedly. Go in here, make sure, go look on my MT5, MT4, look where I got in the market, type it in, hit, go here, 50. You're done, click out of this. Okay, where's structure at in the market? So we're here, there's one here, there's one here, there's one here. There's different areas where you could go. This one right here would probably be the one I would have set it to, because I like to take bigger gambles. So I would set this thing right to those wicks there. Did it hit it? Absolutely smacked it for 224 pips. Pretty simple, right? Pretty easy. Say you hit that one. I mean, we could keep going on over and over with this whole TP system. Really easy with it. Say we got in the market back. Say we took another entry right back into here. Walk through the same thing again. You would go, okay, I'm ready, hit it. Come in here, make sure my entry price is, make sure my pips are in, or my 50 pip stop loss good. I'm good to go. Roll it. Okay, I got a TP here. This is structure here in the market. That's 168. Is it good enough? Yeah, it's good enough for some, for a lot of people, down here, there is actually structure right here in the market. So if you see structure here, you can run it down to here, run it down to this point here, and obviously, see me, you can sit here and go, boom, tap a line, run that, you're up here, tap that line and go right down to here with it, boom. 424, did we smack it? We sure did. We got it back over here. We went down and retested that area, boom. It always goes back and touches those structure areas. It always does. You can set your TPs to it. Are you willing to stay into a trade that long? When you start seeing stuff like this rejection in the market of, why did it do this here? A lot of people don't understand when it comes down to a structured area into the market, it's gonna move sideways, it's gonna pull back, and it's got to break through. Where did it have to break through? Here. It had to break through this area right here in the market. It had to break it. You can kind of see it right through here. It had to make its clean break. When it finally broke through, guess what? Bye-bye. Did a little more pullback and it just melted away. It has to break a structure area to keep going. It will, when it comes down to a structure area, it will bounce. You got to be willing to hold on and stay into a trade, into these. Don't be scared to, if you're willing to say, hey, I'm good here and I hit that at 181 pips, hey, you're good to go. If you're willing to take that, that's fine. If you want to, that's absolutely fine. It's how you want to trade it. But I'm showing you like structure areas in the market for take profit, because there's different ones that you can take here. There's even one right here actually too. There's even one right here you could do. There's even one even farther down here you can do too. So you can set this thing a long ways down here, and you could hold on to a trade. See, it never got to the exact bottom one. That's where you manage your trade in here too. So, because a lot of it, I mean, yeah, you could have took 400 easy out of this, 422 easy, tapped it here. It might have stopped yours out. But here's another thing too. Sometimes too, I will pull back on these a little bit just in case, because sometimes you see these wicks. If it doesn't go through your broker all the way through, it will not close your trade out. I've had that happen to me before. And that's one thing you gotta pay attention. Back that off about 5 pips or something, 5-10 pips. It's okay, to take this here. So that's a lot of times, that was at 422. You could back that down to 412 and it would have probably closed your broker out on there. Or even backing it down a little farther to say, hey, I want to just do like good 400 pips. I can't get right on there without going in and dialing it down, but you get the point of it though. It would have closed that out right there on that wick. It would have hit it. It would have closed that trade out, done on that trade. So you at 400 pips, good, boom, out of here, next trade, to look for. So it's just little re-entries. And another thing too, and I'm going to throw this in here. So this is your touch points. Like, okay, this is my TPs. You find them. If you can't find them, here's a little thing I'm going to show. 5 minute. 5 minute is big to find structure areas into a market. So if you can't really find them and see them much, guess what? Guess where I was marking? Boom, boom here. You can kind of see take points on this here. You can even go up here and move these up a little bit too and say, hey, yeah, these are right there. They're going to be a little shorter, but you can actually get them. They'll actually close your trade out. You doing this here. So it's pretty easy to go back. You have to go up in a time frame to try to find some of these take points. I have to do that every once in a while because just the way that some of the charts move sometimes, you can't see them on the one. You got to go back so far to find them. But if you go to the 5, you'll be able to find them sooner. Just mark them on your charts and then turn back to the 1, and you got them right there on your chart. They'll be right there. Try to move this thing over. It's kind of lagging on me just a touch. So there they are. There's all your touch points right there. Boom, boom. Set it to it. And then if you're up into a trade, say you're into this big trade here, there's going to be another thing. This is a little bit more step here, going in a little bit more depth. I want to tell people what to do. Take the stop loss and move this thing up. Go in and modify your order. Say, hey, I want to move my stop loss. Say I want to take about half of that, like 200 pips. Good way to do this sometimes is go into here, measure down 200 pips, measure 200 pips, get her somewhat close. You can readjust it and say, hey, I can do, I can't get it too close. So right here, it'd be the 2.6, move your stop loss up to 216.61, just in case that thing did not go down and hit your take point and come back and hit your stop loss up into take profit. You still get 200 pips profit if it hits that and stops you out. You still make 200 pips. So you're kind of moving your stop loss up into, this would be break even up here. If you move your stop loss down, if you moved it down to 0, that's moving your stop loss to break even. So if you're up in the profit, say, hey, just letting it ride. If it comes up here, test me, and it tests me out there, I didn't lose any money. I walk away in the next trade. Moving it up into profit a little bit will help you. Like, okay, it rejected up. It hit my 200 pips. I got 200 pips. I still made money out of it. It's pretty easy. It really is easy to do. You just got to go and modify. I do that every once in a while too. If I'm in some of these like a little bit longer trades like this, I do move my stop loss up into take profit up here. I'll get it up in here and I will take some TPs off of those just in case. Just in case. You never know what will happen in the markets. So you're securing some profit. You're gonna walk away with profit when you do this. Let's see here. I got to figure out where I was at here, Jason, in the chat. That's right, John. Noting the high candle in the point, which is a sign of which changed directions, which it did. Absolutely. How do you determine a good entry? Kathleen, so when you determine a good entry, like what Jason was saying, thank you, Jason, Bonnie and Clyde on the re-entries, stuff like that, drawing your lines, reversal trades, stuff like that. I mean, you gotta trust. The biggest thing is trusting your markups and trusting and say, hey, I need to hit the button. Don't hesitate, just do it. That's the biggest problem that people do. They wait too long, and all of a sudden the trade is gone, and they're too late on it. You don't be scared to hit that when the time comes, and when you get over that fear of sometimes you can just get going. Do you trill your stop loss or leave it alone? I just explained that on there. Perfect. Do you do a flat 50 pip stop loss or do you add the spread every time? I do not mess with the spread. I do not mess with the spread. It's 50 pips, what my entry is on my broker. That's what it is. I do not mess with the spreads on it. My MT5 is usually really, really close on not even have to even mess with the spread on it. Especially do not trade around. Here's my thing is say do not trade around do not trade around um around news. I never trade around news. I love trading after news. And the reason in fact why is you can get more pips off a trade after trading news. You can get more pips. If it goes up and we have a big spike up in the news, you draw your line and watch that reversal happen. You can start picking pips out of that on the way down, take profits, and it happens to reject back up, take a re-entry, hit it again because it re-entered back up, say 150 pips, you get in and watch that thing fall some more. You're grabbing more pips on the way down. You can actually grab more pips than what it actually moved up or down, whatever which way it happened. So it is possible. I've done it. I grab more pips than the full movement has on the full retracement. Do you prefer day slash time you withdraw from a broker account to avoid high fees? Brooke, well, I don't think it really matters. I guess to me, it doesn't matter. It doesn't. Trust me, because I do. That's what I live on. So it's I do it on a Friday, and at a certain time, I guess. And I've done it different times in there on a Friday, and it's really the fees are about all the same in there. There's not really much with the fees. So they're going to charge you no matter what, as far as I'm concerned, on the stuff. So you got to be willing to add a little bit more in there for the fees to come out with the brokers and stuff too. But otherwise, I mean, that's pretty much how I do it. And like I say, you can sit here and take trades off of this stuff and do the same thing repetitionally over and over, and taking these lines here, your take profit lines here, and you can just sit here and go on a chart and look on these charts and just mark them up because they're there. They're 100% there. Like you've seen this one retrace back up to here. A lot of this stuff here, you can go, if you go back over to the 5-minute, it didn't do a full, a lot of people would have some people would have marked there. Me, I would have just been marking here on a 5 when it left this alone. And it looked like right here on this one, that's where it was at. It whipped through it. It would have called it a TP and would have been done and out of the market. Simple as that on that one. So, but otherwise, that is how pretty much I do it. I keep it pretty simple, pretty easy. So, guys, got any more questions? I think we're gonna be good to go tonight. Okay. Sounds good. So otherwise, let me stop it here. I got a few other things to say here too. I will be, let's see here.